Have you ever looked at a stock and thought this is unstoppable? Or maybe you have seen a sector boom and wondered, should I get in before it's too late? Every now and then, a new hot investment pops up: tech stocks, real estate, crypto. Prices soar and everyone rushes in believing it's a once in a lifetime opportunity. But here's the real question: is it real growth or just another market bubble? And if it is a bubble, how do you avoid the crash? Let's break it down in this video. Hi, welcome to Holistic Investment.in, where we simplify the world of personal finance, especially for individual investors like you. So, most people think bubbles form when stocks become too expensive. Sounds logical, right? But if high prices alone created bubbles, market would crash all the time. So what's the real driver? Human psychology. Think about it. Have you ever heard someone say this stock will never go down or the market will only go up from here? When optimism turns into blind faith, caution disappears and the prices skyrocket beyond reason. Remember India's tech IPO frenzy? Startups with zero profits were trading at sky high valuations simply because investors believed in their future dominance. And then reality kicked in. Some thrived, many collapsed. So the big question is, are you investing in real value or just buying into hype? Ever noticed how bubbles always seem to form around exciting new industries? The dot-com boom, AI, electrical vehicles, green energy. There's a pattern. A new technology emerges, everyone believes this time is different, and investors rush in without thinking about the risk. But here's the thing: not every new industry succeeds. India's fintech and e-commerce space saw huge investment. But how many companies actually turned into sustainable businesses? Some became giants, but others struggle with competition, regulations, and weak business models. So before you jump in, ask yourself, am I investing in innovation or just following the crowd? We all love high growth companies, but let's be real, how many of them continue growing at the same speed forever? Think about it. If a stock is priced for unstoppable growth, what happens when it slows down? In India, we have seen stocks trading at ridiculous valuations simply because investors believe in future potential. But what if the market gets crowded? What if profits don't keep up? Before you invest, ask yourself, am I paying for long-term value or just assuming prices will keep rising? If bubbles seem obvious in hindsight, why don't people avoid them? Simple, because timing the market is nearly impossible. Stocks don't crash just because they are expensive, and they don't bounce back just because they look cheap. Look at India's stock market today. Valuations are high, yet the market keeps hitting new highs. Does that mean a crash is coming? Maybe, maybe not. Instead of trying to predict the peak, smart investors focus on one thing: market sentiment. Are people overly optimistic? Are risky assets attracting too much money? If yes, then maybe it's time to tread carefully. So, if predicting bubbles is so tough, how do you protect your money? Here's how. Number one, stick to fundamentals, not FOMO. Are you investing because it is a strong business or just because everyone else is? Look at profitability, cash flow, and long-term sustainability. Number two, diversify. Don't put all your money in one trade. Would you bet your entire savings on one sector? Diversification reduces risk and protects you from downturn. Number three, avoid the herd mentality. If a stock is making headlines every day, it's probably already expensive. Be cautious when the crowd gets too excited. It often signals a correction is near. Number four, think long term, not just quick profits. Are you investing for the next decade or just the next few months? The best investors stay patient and focus on quality businesses, not market fads. So here's the key takeaway. Don't let hype dictate your investment. History has shown that no bubble lasts forever. So how do you protect yourself? Stick to the basics. Ask yourself, is this investment truly worth its price or am I just following the crowd? And let's be honest, navigating market cycles, valuation, and risk isn't always easy. That's where expert guidance helps. A certified financial planner, CFP, can help you build a strategy that aligns with your financial goals without falling into common traps like panic selling or overpaying. Do you want a consultation with such professional guidance? Then definitely click on the link in the description to register for a free consultation with one of our certified financial planners for professional guidance in your investment and financial decisions. So next time you hear someone say about the next big thing, take a step back and ask yourself, is this a smart investment or just another bubble waiting to burst? What do you think? Have you ever invested in a stock that turned out to be a bubble? Share your experience in the comments. Like, share, and subscribe for more smart investing insights. See you in the next video. Thank you for watching.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.